Also, please remove all distractions. The information we will be sharing is very important, and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next hot thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable, it's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, good morning. How is everybody doing today? I hope you're having a fantastic Tuesday morning and ready to jump in and rock it for another live stream on this wonderful day. We've got some exciting stuff going on in the market, a big rebound from yesterday, and we're going to talk about that coming up here momentarily. Before we do that, if you have not liked and subscribed to the channel so far, please do so that you can get all the alerts. Make sure you turn on the notifications so that it gives you a little ding and you know when we're live. All right, today we're going to jump in and we are going to do some market analysis, but when we start getting into our core teaching, we're going to talk about 3 reversal patterns that I think you are going to want to really understand and learn if you're kind of new to trading and new to the whole idea of patterns and identifying trend reversals. Then these are going to be 3 patterns that you want to lock in on and make them second nature for you. So that's what we're going to talk about in that section. Before we get there, of course, let's do our market overview and take a look at what is going on. And we are up right now 1,000 points. So it's the exact opposite of yesterday. Yesterday when we went live, we were down 1,000 points. Today, we are up 1,000 points, which is kind of funny. And what's interesting is we are actually right at the same closing price that we closed last week at, if you can see that in there. So if we were to close the market right now at this very moment, we would be closing essentially right where we closed last week. And that basically just washes out everything that happened yesterday. But there's a bigger story that's at play, and I want to kind of build this up for you so you understand it. Yesterday, we talked about the bearish trends continuing. Everything kind of started to set up for that last week. I had big yellow flags about it. I was worried that, hey, I think that we've got a lot of support to get through. I'm not sure this bearish trend can actually continue. I gave that argument yesterday. I also gave the argument that we've got a lot of individual stocks that instead of being bearish, they're actually putting bottoms in. And I said this yesterday that I felt like we were very close to where the bottoms should be. It's just that the index trends were still moving down, and we had clear bearish signals from the indices. So we kind of had a little conflict there. Well, guess what happened? Yesterday, where we ended the day, intraday, we got to this particular pivot point right here that I'm drawing on the screen. We got there. If you can see that lower candle shadow, it bounced right on that support. We closed a little bit higher than that. And then today, this is a big story. What happened is we got a candlestick formation where we gapped up. And currently, if we close where we are right now, we'll be closing above yesterday's full candle. That is important. That is significant because that is a specific candle formation, one that doesn't happen a lot, and one that almost always leads to a bullish swing following the construction of it. So let me explain this to you. This particular candlestick formation is called a one white soldier. Now, it doesn't look white because it's a red and a green candle. But if you look at the original candles, which were black and white because they were drawn on paper, this would look more white because that green candle will be a white one. So that's where it comes from. So here's the way that a one white soldier takes shape. You have a long day or a fairly large bearish candle. That's what we had yesterday. In this case, we had a long lower shadow. And then the next day, the candle gaps up and trades above and closes above the previous day's full candle body. Okay? That's what it looks like right there. It's exactly what we've got constructing right now. Now, more often than not, whenever you see that, this is a candlestick reversal. I'm talking about chart patterns reversals later today, but it's kind of ironic because if I'd known exactly what was going to happen, I probably would have done candle reversals today instead. Just go back, a month ago, we had the same pattern right here. After this initial bearish swing, this is the huge bearish swing that started it. Look, there's the exact same 2-day candlestick formation, and boom, there's your bounce. Okay, and you can go back and I'm not going to spend a whole lot of time doing it, but you can go back and find various one white soldier candle formations. They have such an incredibly high probability of moving bullish. It's incredible. Now, if you are a contrary trader, and I'm not, I am a trader who says trade with the momentum because I've been burned too many times. I say, why try to guess? Why try to fight the momentum? That's not something that I have found generally works. But there's a lot of people who do. A lot of people try to bottom fish. They try to find the very, very bottom. They try to buy, and they go counter trend all the time. I'm not that person. But if you are that person, this is one of the best signals you could see. This signal right here, if you're a counter trend trader, is a buy signal in and of itself. Now, I want to get through the end of the day. I want to actually see the day complete with that candle formation. But on its own, that candle formation is a strongly bullish candle formation that does suggest the next swing for this is going to move to the upside. Now, will we trade exactly to the previous pivot and turn down? That is a possibility. Or will we trade up into these averages and maybe turn down? That is a second possibility. Or will we actually get to be back into some bullish momentum? And that is also a possibility. What I think is going to happen, and I've been saying this since last week, I think we're going to have just more junk in here. I think we're going to be stuck for probably into mid-May, maybe longer. I think it's just going to kind of get stuck right in here. That's my forecast, and it's going to look a lot like it does this week, where we have signals that look like we're going bearish, and then no, we're actually going back up, and then you're going to get up here and probably have more of those candles. I bet we wouldn't be surprised if we have an evening star reversal up here. And then it fizzles its way back down, and we just do that back and forth for a while. My hunch is that's probably what we're shaping up for, but in the immediate turn where we are right now, based on today's candlestick formations and in contrast to where we were yesterday. Yesterday, it looked like the bearish trends were going to continue. Today, our candles are telling us flat out the exact opposite. Our candlestick is telling us, nope, we're working our way back up. And like I say, it's a very, very strong bullish reversal pattern. Candlestick formation. Now, let me poke a hole in some of what I just said and say, before everybody goes in and starts buying, because inevitably, especially on social media, inevitably, that's what some of you are going to hear me saying. That's not what I'm saying. But if that's what you think I'm saying, then let me tell you why it may not work for you. We could have just made the same argument back here where we had a bullish piercing pattern. Come on, pen. Right there. Right there is a bullish piercing pattern. Now, it wasn't in as good of a context. We hadn't really sold off a whole lot. So the bullish piercing pattern wasn't really in the right location to make the pattern, but it was there. And if somebody had purchased based on that, then you would have been really disappointed. But a bigger one was this one right here, which is way too big a candles for this cycle, but it really does fit the criteria of a bullish engulfing. And a bullish engulfing should be followed by a bullish swing as well. And obviously, we basically rallied the entire move in one candlestick, so we were already back in the middle of these averages, and it didn't take much before we just continued. So my point is, just because you see a bullish candlestick formation, in and of itself, it's not enough to take the trade. There's plenty of other things that I want to see stacking up. One of the other yellow flags that I have, our JMAC oscillator is very strongly bearish right now. In fact, contrary to suggesting that we're actually going to rally, it's telling us the opposite. So that's a problem. Our stochastics, on the other hand, is kind of right on the line. If you can see right here, these two lines are actually literally moving together, which means it could break either direction. So those two oscillators kind of cancel themselves out. There's no coherence between the two of them there. That probably suggests that the candle formation is probably going to be more legit than these indicators. But I just want you to know that, just because we see a bullish candle formation in and of itself, it doesn't mean you should be buying. There's kind of a stacking of evidence. Remember, we talked about the 5 disciplines of trade analysis, and candlesticks is just one of them, and it's not the most important. So, but it is an important one, and more importantly, that is an important pattern that we're seeing. So that's why we wanted to talk about it today. Let's move on. Let's talk about the S&P 500. We got a lot to talk about in our market overview. S&P is doing the exact same thing. I won't spend a lot of time talking about it. It is literally doing the exact same thing. We have a one white soldier bullish candlestick formation, and we're back above our pivot point here, but we are right at our 10-period moving average. So let's see where that one goes. Kind of the same forecast I have for all three of the indices here. And when you look at the NASDAQ composite, it's doing the exact same thing as well. So all the indices are pretty much in sync. They're all looking exactly the same way. I'm back to pretty much what I've been saying for the last week or so. I feel like we're building a lot of support here. I don't think that we're going to be into a strong bullish trend right now, but I do think the immediate extreme bearishness is over. Let's see what our VIX is doing, because I haven't looked at that. I forgot to look at that yesterday with you guys. Yeah, VIX has continued to fall, but it's not falling as quickly as it was. So it seems to be building kind of some, I hate to use the word support, but it kind of seems to be hovering around 30 on the VIX. So that tells you that the volatility is falling, but it has not reversed necessarily completely. All that to say, big picture forecast here, big picture view. I'm right where I've been for a week. I think that we're going to continue to establish these support levels. We're going to see some back and forth. We're going to see some days that look bearish. We're going to see some days that look bullish. And I think we're just going to continue to build these support levels as a new foundation comes in. And then I think we'll be rallying from there. The interesting thing is that rally is probably going to kick in around May or June, which typically summer months are a little bit more on the bearish side. But hey, I'll take it. I'll take it whenever it happens, right? All right, let's look at a couple of other things I want to talk about. Let's talk about crypto really fast. Bitcoin is moving today. Actually, it started yesterday, back above our averages. Our averages are starting to cross. That all looks great. My only yellow flag for Bitcoin is we are running into a major pivot at 92,500, and we are overbought on our stochastics oscillator. This is the only yellow flags that I have. Everything else looks incredibly great for Bitcoin, including our custom JMAC indicator, which looks great there as well. What do I think is going to happen with Bitcoin? Well, anything could happen. It is Bitcoin. But what I think you're probably going to see is I think you're going to see some resistance coming in about 92,500, probably pull back down and test this recent breakout, because that's a breakout of some patterns that we're going to talk about today. Test that recent breakout from the top and then break through and continue. So I don't know that the big trend for Bitcoin is here yet. A lot of you want it to be. I don't know that it is. I think we've got a little bit more to shake out, but I do think that we're moving in the right direction, and probably we're not at this point, probably not looking at getting back down to 72,000 before we find our solid support. So I guess that's the good news from that standpoint. But no, I'm not quite there yet where I feel like Bitcoin is ready to rise back to 100,000 plus. I think we got some more to get through. We just broke out of this pattern. I'll go ahead and draw it out for you here. So here's kind of the pattern. There's kind of your neckline. There's a little inverted head and shoulders in here. There's that neckline. Here's that breakout. And typically what happens on a pattern like this is it comes back down and tests it from the top before it continues. So that's what I'm looking for. When it does that test, your stochastics will come back down. It will make the turn. All of your averages will be in sync, and that will be the absolute perfect buying time for Bitcoin. So that's what's coming up there. Really quick, just taking a look over here at Ethereum. It is up 114 points today. Still has not made its reversal. Not above the averages. It's above two of them, but still working hard to establish its support. Kind of the same thing across the board here for the other cryptos. But Solana is the other one I'm really excited about. I've been talking about it. It is breaking out. It's in the middle of that breakout right now. I think, personally, I think it's going to probably have one more little sideways to down movement, ease up our stochastics overbought, and then give us our breakout signal. That's somewhat speculative, because what also happens oftentimes is, very often, when we do break out into a new trend, you will already be overbought with your stokes, and it just stays overbought for 8 or 10 weeks. So that is also a possibility. So I'm not saying exactly what's happening with Solana yet. After I go through today's chart patterns, this will make a little bit more sense. This is what we call the neckline. So we're right on that right now, which is ready to break out, but it hasn't fully broken out yet. So we're really, really close. I'm very optimistic about the future of Solana. I've been talking about it now for probably a week and a half, and I think it's going to have a really explosive move. I would expect probably 100% plus. I expect when this next move for Solana happens, it will at least be back to our all-time highs in the 250, 60, 70 range, and quite possibly even double from that. So this is potentially a really good foundation spot for Solana coming in here. Outside of that, let's hit on gold really fast. Gold is down. Our GLD ETF is down 250 today. I told you yesterday, be careful because we're at that pivot point. It's one of our Fibonacci projections. I said, watch for a little pullback. And I said it could take the form of some sort of interesting candlestick formation. Boom, there it is. There's your bearish engulfing candle formation. That is your signal you're looking for. You've got your Stokes starting to turn down now. That is an exit signal. Take your profit. We had a really good run on it. Take your profit, let it pull back. Whenever it sets up again, we'll be there to jump into the next wave of buying behaviors. So that's where we are on gold. Okay, I think that's enough. We've been 15 minutes in the market overview. It's probably all we need to get through today. If you got any questions on that, type it into the chat, and I'll be happy to try to answer that for you. Welcome to those of you over on Rumble and to those of you over on Facebook as well. Feel free to type any questions or comments in there, and I will do my best to answer those as well. I also pinned in the chat the download for the Trade Maestro cheat sheet, which goes through our entire trading system on a PDF, so it's really, really convenient in that way. All right, let's jump in and talk about reversal patterns. I felt like, coming off the Pick Winning Stocks Challenge and kind of setting up for where we're going in a couple of weeks with the new Wall Street Secrets Live, I felt like, we kind of have a week or so here of just kind of filler content, and I wanted to pick up on some of the stuff we talked about in the challenge and kind of the next steps from there. So if you remember, I'm just going to kind of pull back for you. If you've been following me now for a couple of weeks, we shared the 5 disciplines of trade analysis. And those 5 disciplines are your support and resistance, your moving averages, chart patterns, candlestick patterns, and then indicators. So we went through those. That was one of our lessons, whatever it was, a week and a half ago, 2 weeks ago. Then in the entire Pick Winning Stocks Challenge, we laid all that out. We went through the 3-step trading blueprint. We focused in on the analysis piece, and I taught you on a high level, I didn't go into the granular details, but I taught you on a high level the first 2 disciplines of trade analysis, which are support and resistance. We went into pretty good details on that, and your moving averages for your trend analysis. And so once you've got those 2 pieces, you're about 80-85% of the way there. Now, the other 3 pieces, or the other 3 disciplines of trade analysis, they just kind of come in and they help support. And there's different ways that different disciplines will give you insight in terms of which direction the trade is going. Chart patterns are a unique discipline, and I want to give you an introduction to that today, and specifically talk about reversal patterns, and 3 of them that I think you need to get very, very intimate with. You need to become very familiar with these. It doesn't matter if you're a day trader, swing trader, what you are, you're going to want to recognize these patterns, okay? So with no further ado, let's jump in and let's have that conversation. What are chart patterns? Chart patterns are little patterns of trading behavior. Little patterns of trading behavior that show up on the chart. Now, people don't like this term trading behavior. Can a stock misbehave? It's not a child. Well, it's what it is. The people behind the asset that you're trading, if you're trading crypto, if you're trading stock, whatever it is you're trading, the people behind it are the ones who are ultimately making the buying and selling decisions. And there is a behavior that goes with it. The term for that in market terms is sentiment. Behavior, sentiment, either one. You can use those words interchangeably, okay? But when you start to see the trading behavior and you start to see these patterns of behavior, we can use some what we would call behavioral finance, where we're looking at these patterns and we're watching them, and we can anticipate where the trend is going or where it's about to go based on these patterns of human behavior. Now, I know the first argument people are going to make, or one of the arguments, is, hey, we've got all this high-frequency trading. We have all these bots that are out there. How can you say this is human trading behavior? And I'm going to tell you, with all my years in the market and all the experience that we've got, I promise you it is humans behind it. Whether it's humans that are physically pushing the button to make the trade one way or the other, or whether it's humans that have programmed the machines, regardless, it sort of becomes a bit of a self-fulfilling prophecy, because as people start to look at them and you start to program the machines to behave on the same patterns of trading behavior, the same chart patterns, what you start to get is the same behavior. Ultimately, behind every behavior, even the automation, is a human who programmed it to mirror and to mimic the human behavior. So, perhaps as we move down the road, I'm sure there's probably some great AIs that are just destroying the market right now that haven't become public for us to trade with yet. But I'm sure as generative AI gets smarter and smarter, and as it starts to develop more, we'll start to see a break in some of these things, or maybe not. Because even when you look at AI and you look at generative AI in particular, and the way that it does its forecasting of what it's going to put out there, what is it basing it on? It's basing it on analyzing the human behavior. So if you have a conversation with chat, it analyzes your conversation, it analyzes the way that you talk to it, and it mirrors that back to you. So even when we think about stock performance or crypto performance in the charts, as AI gets smarter and smarter and analyzes the performance, what's it going to spit back out? It's going to spit out a generation or it's going to generate a version of that, trade signals that are based on the same human behavior that it's analyzing. So I don't think that this pattern is going to change. It's certainly been here as long as I've been in the market, and we can go back really 100 years, but certainly to the 1930s and 40s. A lot of these patterns got established back then and were documented and codified in the libraries of technical analysis. So it's a discipline. It's a study that's been around for a long, long time. They've proven themselves over time. We've got historians who've gone in and done really, really in-depth analysis and comparison of the behavioral play out performance, if you will, of the different patterns. And it's just been consistent. So it's a great discipline to understand. So back to the original conversation. What are chart patterns? They are little patterns of trading behavior. Different patterns appear with different trend phases. So we've talked about the 3 phases of the trend: accumulation, public participation, distribution. Talked about those 3 phases. During each of those phases of the trend, we get different chart patterns. And the chart patterns in those phases mean something different. What they do is they allow us to anticipate future direction because they're helping us anticipate what shift in the pattern or shift in the trend phases is starting to occur. So let me show you an example here. Take a look at this picture here on NVIDIA. And I've got a yellow box up here. If I were to ask you, what does this mean? Does it mean anything to you? And most of you would look at that and say, well, it's gone really high and then it's come down a little bit. And some of you, if you're very, very bearish, you'll be like, oh, I got to sell this thing because it's selling off. And some of you who are very optimistic about the stock would say, oh, I got to buy because it's pulled back and now I can buy it cheaper. Which one of you is correct? And the answer is both of you are going on speculation. One of you, the one who says I have to sell because it's pulled way back and it looks bearish, it's gone too far, it can't stay up there. You're doing that based on speculation. It's driven by fear. And the fear is that you're going to lose your money if you buy into it. Or if you're holding it, your fear is that you're going to lose your money so you get out. Those of you who look at that and say, oh, it's pulled back, I need to buy because it's pulled back and this is my chance to buy it cheap, you're also buying on speculation. Neither one of you did the analysis. What I want you to recognize here, I'm going to take it full screen again, there's actually a chart pattern in here. If you don't know what the pattern is, it's fine. We're not going to get into it, but over here on the left, there's a little gap. If you can see my cursor right here, making it as big as I can. You see that cursor? There's a gap right there. There's one over here on the right side as well. This is a series known as an island reversal pattern. And yes, those of you who were bearish, you were correct. It did go down. But you were correct for the wrong reasons. And this is part of what my calling in life is. Part of my calling, the reason I do the teaching that I do, the reason I share with you is because there's too many people that trade and they get the right thing for the wrong reasons. They get the right result for the wrong reasons. And so there's too many people that would have looked at that and they would have said, oh, it's going down. They didn't know why. They assumed one thing. It was a different reason. They would have shorted it or they would have closed their positions and they got rewarded. So they assumed they were right. But then you fast forward, they see the exact setup on another chart or something similar, something that they perceive, hey, it's gone too far. It's really high. It's starting to go down. I should get out. I should short it. They do the same trade and they get burned and they want to know why. Because you weren't really doing analysis. You were trading on intuition or you were trading on a false justification of what was going on. When you understand that the chart was speaking to you, the chart was telling you what it's doing, now you actually have analysis to back it up. Those of you who understood that pattern, who recognized the island reversal, you know it's a highly, highly bearish pattern. In this context, after a huge long trend, a gap up, which is an exhaustion gap, followed by a breakaway gap to the downside, boom. That thing's got about a 90-95% chance of trending bearish, and more importantly, it terminates the previous trend. That is information you will only learn from the discipline of chart patterns and understanding and learning what the patterns mean and how to interpret the data. And so when you come back to a trade setup like this in the future and you see that picture, rather than going on intuition and saying, I'm going to short it because it's gone really high and it looks like it's going down, or I just don't think it should be that expensive, rather than trading on that intuition, now you have a reason. And now you can start to actually analyze it and start to actually get more consistent, predictable results. So today, I want to get into a specific set of patterns. There's 3 types of patterns. I'm going to give them to you, and then we're going to dig into some reversal patterns. There's 3 types of patterns. There's reversal patterns, continuation patterns, and consolidation patterns. These are the 3 types of patterns that show up in the market. Reversal patterns, continuation, and consolidation. And what you need to know is each of these pattern types show up in a different phase of the trend. Consolidation patterns will show up and will present in an accumulation or a distribution phase. Continuation patterns will show up in a public participation phase. They tell us the trend is continuing. Consolidation patterns tell us that we've gone too far and it's got to consolidate for a while until we get the next direction. That's an accumulation or distribution phase. Reversal patterns will show up at the end of the trend, and they tell us that the trend is reversing. More importantly, they terminate the preceding trend. Now, how valuable is that for you? For some of you, you're thinking, oh, if I can find the reversal pattern, I can get in early and I can be bullish when everybody else thinks we're bearish, or I can be bearish when everybody else thinks we're bullish. Actually, reversal patterns serve a much more important function. Yes, they can anticipate the future direction, but I used a word just a moment ago called terminal. The more important signal that you get from reversal patterns is not the fact that the trend is reversing, it's that the preceding trend is ending. Which one's more valuable? Is it more valuable to recognize that we're early, maybe 3 or 4, 5, 6 weeks early in a new trend? Is that more important? Or is it more valuable to recognize the bullish or the bearish trend I've been trading has just completed and it's done? So sometimes the more important signal is not, hey, now it's time to be bearish. Sometimes the more important signal is, now it's time to no longer be bullish. And to me, that's the more important signal that we get from our reversal patterns. So I want to go through 3 of them today. These are the 3 most important. They show up all the time, and we've got several examples of these in the current market right now, and that's one of the reasons I wanted to talk about them. So 3 reversal chart patterns that you need to know. The first ones we want to get into, I just kind of talked about this, but I'm going to give you a couple bullets on reversals. Reversal patterns show us that a stock is about to reverse. These reversal formations are terminal patterns. They terminate the preceding trend. It shows us that a bullish trend is reversing to bearish, or a bearish trend is reversing to bullish. So understand what the reversal pattern is showing. Now, the first one I want to talk about is a double top or a double bottom. These are the same patterns. They're inverted. Just one's at the top, one's at the bottom. Same patterns, just backwards. Okay? Double tops and double bottoms. Here's what happens. In a double top, a stock hits a resistance, that's the top, or it trades down to support, that's the bottom. It retraces the move, followed by a second attempt to continue the previous trend. And it fails. When the second attempt fails to continue, the trend is terminating and it's preparing to reverse. Let me show you some examples. This is an example in the Dow Jones Industrial Average before a big old crash in 2020. Could we have known from technical analysis that 2020 was going to happen? Well, I could not have told you from technical analysis that the market was about to, quote unquote, crash nearly 50%. That part we did not get. What we did get was a double top right before the crash that said the previous bullish trend is done. Now you tell me which one's more valuable. Obviously, and we had other tools that told us that the bear trend was heating up. We had other tools for that. But in this context, in the context of the trend and the reversal, we didn't know COVID was going to happen the way that it did. That we didn't know. We didn't know all the outside impacts that were going to come in. We didn't know it was going to sell off from 29,000 to less than 19,000, almost 18,000. We didn't know those pieces. But we did know because of this double top where you see it rallied up, it hit a new resistance, it pulled back, it tried again, it failed, and it started to pull back. That failure told us this trend is done. So we're able to get out of our preceding bullish trends up around 28,500, 28,800. We're able to lock in profits. Which one's more valuable? To take the gamble on the bearish trade that might be coming up, or to say, hey, I just had this huge bullish trend and I've got all these profits and now I know it's time to take them. That's why I say reversal patterns are oftentimes more valuable to say it's time to no longer be bullish. Sometimes that's the best signal that we get. Let's take another example. This is a double bottom. This is after a fairly large fall in Western Digital. We moved from 64 down into the mid 40s. We hit a bottom and then we bounced and then we hit the same bottom and failed to continue the bearish trend, and there's your reversal. Now you will notice in these examples, double tops look like an M. You can think of this as M for murder. It's about to go down. Double bottoms look like a W, and you can think of that as W for winner. M for murder, W for winner. Winner, winner, chicken dinner. Right? Let's talk about the entry. This is really important. How do I trade this thing? Well, first of all, the first sign of the double top or bottom is an exit. We end the preceding trend. Now, the next thing we want to do is we want to look for the first retracement, and we draw what we refer to as a neckline. And we're going to enter the trade on the break of the neckline. And ideally, volume is also increasing as we break out. Okay, so I'm going to show you right now. Kind of zooming in on this Dow Jones reversal. You see how we made the first top, we pulled back. That first retracement is the beginning. That's what we call the neckline. That's going to be your entry. Made the second rally, it failed. We come back down. Looking at our neckline, when we close below the neckline, that's your bear entry. Now, I know you're looking at it thinking, man, that's pretty good. And it was pretty good. And a lot of times it's pretty good. But a lot of times the pattern doesn't do exactly this. That's why I say sometimes the best way that we can use this is as a reason to get out of the trade. And we got other reasons to get into the next phase of it. This is kind of another similar example I'm going to show you right now. But I want to get rid of all this so we have no clutter. Another example in the Dow Jones right now. And you'll notice that after this huge rally that went for over a year, we hit a peak, we pulled back, we hit the same peak. Now where's our neckline? There's our neckline. Okay, I'm going to identify this with NL. There's your neckline. Now here's what happened. As this double top completed and it broke the neckline, if we take the trade immediately on the breakout, what happened is it immediately reversed and it tested the neckline from the bottom before continuing. That is so common. It is so common. That's why I say we actually need additional confirmations before we go bearish, because your failure rate of just taking the reversal only on the reversal pattern will be probably higher than you want. You'll end up with a handful, maybe not a ton, but you'll end up with a good number of what we call whipsaws, where you thought it was going bearish, you jump into the bearish trade, it trades right up, stops you out, and then continues. So we're trying to avoid that. Okay, that's why I say I really like more confirmations for a full-on reversal. It takes a lot more energy. It takes a lot more effort for a trend to establish a new opposite direction. It takes a lot more to reverse the trend than it does to continue the trend. So the first thing that happens is it terminates the previous trend. That's why I say this part of the trade, this part of the pattern, there's your warning. This is the part where it says we are no longer bullish. To me, that is worth its weight in gold. No longer bullish. Okay, I terminate all preceding bullish patterns or bullish trades. Now we still need some confirmations for the bearish reversal. We've got the first one that comes in with our neckline. The first one, the break of the neckline, that's your first confirmation. There's another one that you already know, and that's going to be your moving averages. Watch what happened. On the break of the neckline, I'm just going to circle this right here. Okay, I'm going to get rid of some drawings now. Coming right back to where I circled. Notice what happened on the break of the neckline. When it came back up and tested it, it looks like that perfect continuation pattern that I've taught you from your moving averages. Make sense? So that's why I say you want additional confirmations as much as possible. I see Bill has written a question in here. Let me read it for us. He says, what about that apparent double top on the first fourth of the trend? First fourth. Bill, I think what you're saying is right here. And I'm glad you brought that up. Assuming that's the one you're talking about. Notice what didn't happen. It didn't confirm. Okay, so let me draw these out in two different ways here. The one at the top, there's your double top. The confirmation is the break of the neckline. When it breaks the neckline, that is the confirmation that the double top has formed and it has confirmed. If the one that you're looking at is this one over here, notice it never confirmed. So it's not a double top. It's just a sequence of waves. Does that make sense to you, Bill? I think that's the one you're looking at. And if it is, then I just answered it. Okay? If it's not, then try again and I'll see if I can't bring clarity on that. All right. That's the double top. In a bearish to a bullish reversal, same thing. Here's the picture of that. Same thing. The first iteration, the first retracement, that establishes your neckline. It's the break of the neckline is the confirmation of the pattern. All right, let's talk about the triple top and bottom. Triple tops and bottoms are really easy to understand. It's the same thing. It's the same thing as a double, except for there's three. So basically, when you think about a triple top and bottom, exactly the same idea as a double top and bottom, but there's three of them. You need to know the triple is one of the strongest and most predictable reversal patterns that there is. Excuse me, I kind of got the hiccup suddenly. One of the strongest and most predictable reversal patterns that there is. And the reason is it reveals a very, very, very strong support or resistance. Let me give you some examples here. Take a look at this one on Amazon. 1, 2, 3, boom, boom, boom. And then it finally broke and reversed. Here's a bullish reversal, a bearish trend reversing bullish. This one was a little more out of whack. It wasn't as symmetrical, but it's still the same principle. 1, 2, 3. And then boom, it's off and running. Now, when we think about the entries and the confirmations, once again, it's the same thing you just learned. The entries on this is the break of the neckline. And again, we're looking for an increase in volume. Increase in volume just tells you there's a lot of confirmation that this thing's actually moving. So coming back to the first example on Amazon, that first iteration becomes the neckline. And once that has broken, there's your full confirmation. Okay, and again, you see right here, it actually confirmed it, closed below the neckline, then bounced right back up. and then gap to the downside. So we terminated, the benefit here more so than the reversal itself was the termination of the preceding trend. Such a valuable signal. Now, the next pattern I want to share with you is, I'm going to go much more in depth on this one because it's very similar. It's called the head and shoulders. And essentially, a head and shoulders is a triple top with a small variation. These two patterns are extremely powerful patterns. With the head and shoulders, you have a peak that establishes a new resistance. That's your left shoulder. Then you have a new peak that is a higher high. That sells off, and it tries again, making a new lower peak. And this lower peak forms what we call the right shoulder. Again, we're looking for an entry on the break of the neckline. That's the confirmation of the pattern, and you may or may not want to enter there. We also have the same situation where it often will come back and test it, but technically speaking, that is the entry, is the break of the neckline. So take an example here. This was on Apple. You see how we rallied, made a peak. We sold off. There's the beginning of the neckline. We made a higher high. There's your head. Sold off, made a lower high. There's your head and shoulders. Then it sold off, it reversed. Here's another variation of that. This is on Walgreens. There's a left shoulder, sells off. There's your head, sells off. There's your right shoulder, and boom, it reversed. Now, if we flip it upside down with a bearish trend reversing to bullish, we call this a inverted head and shoulders. And it looks like this. This is one on Costco. You can see that we sold off. We had a little junk before we actually got into the head and shoulders. There's actually a term for that. It's a complex head and shoulders, but I didn't want to get into those details. So just focus on the main head and shoulders portion. There's your, it's upside down, but there's your left shoulder. There's your neckline. There's your head, lower low, rally, pull back, creates a fairly symmetrical right shoulder, and boom, it's off and running. The inverted and the regular head and shoulders. Okay, let's get over to current market conditions and, oops, pushing the wrong buttons here. Let's get over here and see what we can find. I've been talking about this quite a bit on Solana. Depending on if you've been listening and where you've been listening, you may or may not have heard me talk about it. Solana is in the midst of what I believe to be a head and shoulders, an inverted head and shoulders. So we had our bearish trend. There's your left shoulder. We've rallied. There is the beginning of what's going to be your neckline. And that's why I said earlier today that I don't think Solana is done yet. It's not quite ready for the reversal. Here's your lower low. That is your head. Here's the rally to the neckline. And what I'm watching for is a sell-off. Can be very small, but we need a little sell-off and a rally and a break of that neckline. And when we see that, you will have completed the right shoulder. You will have completed the termination of the bearish trend that led to this. And now we're ready to actually trend with Solana. So how valuable is that to identify, especially early on? You know, do you want to go buy Solana today? Well, maybe you do. I mean, if you're a bottom fisher and you love to hodl, you know, it's not a terrible time to buy Solana. But generally what I would do, I personally would wait for the breakout. So I like to wait a little bit. I like for the confirmation. But what if I was bearish on this? What if I was short Solana, which I'm not, but what if I were? Would it be valuable to see this reversing? Absolutely. And by the way, you're not going to get that. You'll get some of it, but you're not going to get all that just from the moving average. If you put the averages back on here, what you're going to see is at first glance, the averages are bearish. Now we're back above them. We're starting to make the crosses. We're getting confirmations here. But at first glance, what you see, if you're just using the averages, is this was a bearish trend. Now what you're seeing is the pattern is telling you, no, that bearish trend is terminating. We're starting to reverse. That's why I say there's 5 disciplines of trade analysis. Not 1, not 2, there's 5. because each of them bring a different dynamic. Yes, it's true. Support and resistance give you the framework. You got to have that. Yes, it's true. The moving averages, especially the way we've created them here in TradingView with our Maestro averages, it gives you red light, green light. Together, moving averages and support and resistance, it'll get you 85% of the way there. But what about those nuances? You know, people say you can't time the market. And I say, no, you can't time the market. I can. And one of the reasons I can is because of patterns like this. I know that the pattern for Solana is telling me this bearish trend is probably done. I can exit bearish trades with confidence. And now what I'm doing, rather than going all in on bullish trades, I put it on the radar and I say, okay, this one's about to reverse. Let's see when it comes to me. Think about it more like if you're setting up. You guys fish? You fishermen or women? You ever seen a trot line? Let me give you this metaphor. Imagine that you go out in the lake and, you know, you've got, we'll call this your big lake here. And let's say you got little fishies here and little fishies over here. And these are catfish, even though they don't look like catfish. And you come in here and you say, okay, I don't know when the fish is going to come to me, but I'm going to set a line all the way across the lake. And I'm going to put little hooks on it. These little, they look like J's, but they're little hooks. And then you say, when the fish comes by, I'm prepared. And then the fishies are swimming around. They come by, they see the little, you know, chicken livers or whatever you have on the hooks. And they're like, oh, that's just a free chicken liver just hanging out here at the bottom of the lake. I'm going to eat it. And then suddenly they're stuck on your trot line. Okay? That's the same principle. When you see an inverted head and shoulders like this, or any of these terminal patterns, when you see them, what you're saying is, this is like putting my trot line out. I'm just going to lie and wait. And then when it confirms, now I am into the trade. Now I enter. How much more confidence does that give you? Thank you, Ken. He says he loves this teaching. Thank you, Ken. How much more confidence does that give you when you look at it from that perspective? You're like, wow, I'm not guessing. I'm trading with a high percentage of probability because I did analysis that suggests this is accurate. I'm not trying to guess where the bottom is. I'm not trying to guess where the top is. I'm not wondering, should I close and then worried that it's going to run up? Should I enter and then worried it's going to turn against me? I'm actually getting on to the right side of the trend. I think it's pretty freaking valuable. Let's find some other examples here. I know I got some more in here. I might have to hunt for them, but I know I got some in here. One of the things, let's look at, we'll go through some of our top 10. NVIDIA did not do it this go around. A lot of these did not have some of the same reversal patterns this recent go around. This is a different one on Palantir. I don't want to get into that. I want to stick with our double tops and bottoms and head and shoulders. Okay, here's a really unique one on Netflix. So on Netflix, we had this huge bullish trend. You know, depending on when you got in, let's hypothetically say you got in back here at 600. You know, we peak up here at 1,000. There's $400 a share. I mean, that was a pretty good run for you. Okay, but right here at the top, what do we get? Left shoulder, head, right shoulder, break of the neckline. Now, notice what happened. Did it terminate the trend? Absolutely. Did it initiate a new trend? No, it didn't. Not yet. So it terminated, and in that regard, it did its job. It really warned us of what was to come. But it just so happened that Netflix has not gotten into a bearish trend. It's like I said maybe 10 minutes ago, it takes a lot more energy to reverse a trend than to continue a trend. So what we see here is we saw that the trend was ending. And I think that's pretty valuable, especially if you were bullish in it, trying to figure out when you want to take your $400 a share. Let's take a look over here at Tesla. Different pattern. We did have a variation of our double top to terminate this. There's your first peak. There's your second peak. There's the break in the neckline. Now, I didn't intend to get into this, but I'm going to give it to you. There's 3 variations of double tops. This is what I would call a leaning double top because the second peak is lower than the first peak. you have a symmetrical double top where the peaks are the same. And then you have another variation that's going to look like this, where the second peak is higher. Okay? The one in the middle, it is a reversal pattern, but it's a little harder to anticipate because it looks like the trend is continuing. The one on the far left, the symmetrical one, is probably the easiest because it's just obvious that we hit the same resistance and turned. The one on the right is the most bearish because it's already leaning. It's kind of like it's got a running start for the new reversal. Okay, but look at how the pattern broke out here. Look at what we did. I've already mentioned when you break the neckline, it generally comes back and rallies. There's your rally. Didn't even get there. Didn't even get there to test it. Continued, and now we're in a totally different pattern here. It's a variation of a couple different things. We won't get into that for now. Okay. Let's look at, if you got a request, let me know. I'll look at different charts if you've got something you want to look at. There's a lot of different patterns I'm skipping because I've only talked about the reversals today, and that's all I want to focus on for now, specifically these 3 reversals. Here's one on Dollar General. There's your double top, very symmetrical. Let me draw it better. You can see there's your peak, pullback, neckline, starts the trend, tests it, continues the trend. I mean, that's as textbook as you can get right there. Terminated that trend quickly and as efficiently as you could. Okay, here's one in Electronic Arts, EA. You just go through a lot of these market peaks, you're going to see these patterns. They're not on not every top has one, but a lot of them do. There's a double top, absolute textbook double top right there on Electronic Arts. You could not get more textbook than that one. Okay? These were all the reasons for the current bear market. These were the tops. I mean, I'm telling you, the market was warning you. Kroger's still in a bullish trend right now. Nothing to report on there. Here's one. This is on Constellation Brands. So this has been a bearish trend for a while. Actually, I'll kind of show you how I set this up because this was from Sunday night. This has been in a bearish trend for a while, but look what happened. We sold off. We hit a bottom. We hit a lower bottom. There's kind of your inverted head and shoulders, and it's kind of matching. This is what we would call, there's a couple ways you could look at this. It's a very non-symmetrical pattern, but it's all the makings of an inverted head and shoulder, just not symmetrical. So there's another version of head and shoulders that we call complex, where you'll have something like that. So you have 2 left shoulders or 2 right shoulders, or a really complex one would be like what we're seeing right now in Constellation Brands. There's your inverted head. That should be your right shoulder. It came back and tested the original neckline. So that's kind of a second right shoulder. And then kind of a third. And we're just testing. We're just running into this, which is why we've got our entry up here. When it breaks out, we're ready to go. So it doesn't really matter if it's perfectly symmetrical or not. It told us what we needed. The preceding bearish trend is done. As soon as we break out, now we've got a new bullish trade. Okay, and I'll show you what we did on this. Let me show you your moving average. So right now your averages are completely flat, but we're back above them. We're ready to roll. Okay, so this is how we start to synthesize it all together. The pattern terminates the previous trend. Now we start to get the shift as the bottom's coming in. And then let's put our lines back on here. Look at where our entry is. Our entry is above the neckline. We're trading it back to the previous pivot, which was a gap right here. If you can see that, that's our target. Our stop is right below our averages. And that is a almost 3-to-1 reward to risk ratio. It's a trade we set up Sunday night. Hasn't confirmed yet, and that's okay. We're fine with it not confirming yet. I want to trade. I want to buy when it's confirmed, when it's moving in the right direction. Let's look at, if you guys are going to request, I'll look at a couple of them for you here. I want to look at some more crypto because a lot of people say you can't time crypto, and I say that's absolute bull malarkey. Okay, this is ADA. It's Cardano. I'm going to get rid of the moving averages so you can see it better. ADA on Cardano was absolutely textbook. Left shoulder, head, right shoulder, Boom, terminated the trend. Now, we got stuck more in some consolidation than a full-on reversal, but that happens. Let's look at Bitcoin. Could we have known that Bitcoin was ending? We could have, but not based on the patterns you learned today. So we won't talk about that. What about Ethereum? Absolutely. Look, the very top of Ethereum was a double top. There was your neckline, the breakout, the retesting, and the continuation of the trend. I mean, look, guys, this stuff is textbook. It's once you see it, you can't unsee it. That's why I've been teaching it for all these years, because, you know, people are guessing. People can't figure out when they should buy, when they should sell. They can't figure out when they should hodl. And when you learn to interpret the market data and you see the patterns, you can't unsee it. We've already talked about Solana in here. See if there was one at the top. So in crypto, one of the things that I've seen, especially at market tops, because there is so much volatility, the market tops often happen very quickly without full-on patterns. Or there's other variations of them. But all right, I've probably gone through enough for today. If you got any questions, type them in there. Let me answer them for you. Let me check over here on Rumble, see if we got any questions going on. Hi to all of you on Rumble. All right, looks like no questions. So here's where we go from here. If you haven't liked and subscribed and followed, this is the time to do it. Like, subscribe, and follow. I hope this has been really helpful for you. So some of you might want to go back and review this lesson. Really, really important information I shared with you. 5 disciplines of trading. This is the third one. It's part of the third one in the area of chart patterns. And I think you can see how valuable it is to identify that, hey, this trend is terminating. This is time to take my profits. So thank you for being here. I appreciate each of you. I'll be back tomorrow, same time, same place. Like and subscribe, turn on those notifications so you can get the alerts. And until next time, happy trading to all of you. We'll talk to you soon.